the RBI's financial stability report projects nearly 14% gross NPAs by September 2021. That can be quite damaging for the sector, sir.
Well, I think there is a caveat in that report. That report is basically, takes into account what is the likely environment in terms of economy and where it is going. If you look at the banking sector today, I think it is healthier than what one could have imagined. Because when we sat as a committee looking at the stress, the systemic stress, we thought systemic stress could be around 70 to 75 billion, about $100 billion, $100 to $150 billion in terms of overall, all sectors of the economy. That is, assets which will need to be restructured. That was the estimate. What it's turning out to be is only about 15% of that at this point in time. So things have worked out much better than what we had anticipated just 6 months back. That is, there has been a bounce back in the economy to an extent that we had not expected at that point in time. As a result, I think the companies that will come to banks and the banks that will need to provide handholding are going to be a much smaller set than what we thought earlier. So I would think that if we look at this, the number 14% probably is a cautionary number rather than something that will actually come out to be, it needs to be addressed.
Sure. Where does that leave the story with bad debt restructuring? And you're heading RBI's restructuring panel. How successful has that exercise been thus far? And how much has been restructured under the program?
Let's look at it in context. Coming into the crisis, banks had been recapitalized. The cleanup of the banking system is, if there was a bad bank in terms of a lot of NPAs and so on, that cleanup was done leading into 2020, early 2020. Capital requirements were set, capital was brought in, and whatever restructuring was to be done at that point in time was done. So we're talking of like a clean slate when this challenge hit us in February or March of 2020. And as I said, we expected a large number. We now think that it is probably going to be 15% of that number. And there are two parts to this. There is a number which is the corporate number and then the retail number. And consistently on both sides, the actual cases that have come to the banks for restructuring are far lower than what was anticipated. So I would think we are still yet to get our feet wet on the restructuring because people have not approached the banks for restructuring in a large way. I think I need to put another thing in context, which is very interesting. If you look at India's corporate results over the last 2 quarters, they have far exceeded expectations. And companies are generating free cash flow at a pace which we had not seen earlier. This coupled with low interest rates has meant that corporate India is healthier than it was in the past. And from all anecdotal evidence, they are now in a mood to repay debt rather than really restructure. We will see how this plays out over the next 2 quarters. But as of now, it looks good.